Good morning, everybody. Happy Monday. Great to be back. Spencer Israel, welcome to Pre-Market Prep. Of course, we are here with you. The market is down, but we don't stop when the market declines. In fact, we actually pick up the pace. We're going to talk about just a continuation of the weakness, the market, whatever you want to call it, correction, sell-off, decline, whatever you want to call it, whatever word you want to use. We are entering now week number 5. We'll talk about that. We'll talk Rivian. We'll talk Palantir. We'll talk whatever you want to talk about. Tim Quast is our guest because it's Monday, and on Mondays, we do Market Structure Mondays with Tim Quast. So I missed you guys. If you missed me, drop me a like. I'd appreciate that very much. And here we go.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, let's bring on Joel. Let's bring on Triple D. Everybody, how are we doing out there?
We're doing okay. Let's do a quick rundown here. Down 73 handles at 46.50. We do have some support in the market, but we'll see if we get a little bounce first. We sure need one. Crude down 319 at 106.56. You have gold in the red by 23.70, 18.59.10. Silver now under $22, down 62 cents at 21.75. Bitcoin, Triple D has a Bitcoin story for us, down 29.30, 32.995. Ethereum futures, they're down 287.50 at 23.97.
So glad I sold that.
Yep. But before, I just want to put a wrap on the Derby, since man, Twitter was just abounding. And Triple D, I have been proud of you for your trading prowess, for you just being a good guy and everything. But I was really proud of you. The way you picked it out, the way the announcer totally whiffed on that. Now I know you're not the only one. But I can tell you why that happened, because I have been in the announcer's booth at tracks, okay?
Yeah.
And what these guys do is they have binoculars on, right? And so he was laser focused on those two horses, and everyone's showing this aerial view. I mean, that horse was so far behind. So he was so laser focused that, and he's looking, and then he just caught that horse at the wire at the absolute last second. And just going back to the race, I know my pick didn't do so well. Last year, I knew my pick was a loser coming out of the gate.
Out of the gate, I remember that.
Well, I even knew earlier this year, because he was so jumpy in the post parade, because it's a new horse. It's only his third race. 100,000 people screaming and yelling. So he was jumping around. I told Lisa, I go, man, he doesn't. She goes, well, go bet someone else. I'm like, whatever. So he didn't do well. Big upset. Everyone knows the horse wasn't supposed to be in the race. But just want to let you know, man. The guy's name's Larry Colmus. I tweeted out to him, but
just
it was
unbelievable.
fun.
For whoever didn't watch the race, this rich strike, which was 80-1, was completely out of it the entire race. He was at the back of the pack, 3-4 horses from the back. And then in the final stretch, it's like they shot him out of a cannon. I don't know how all of a sudden, but when you're looking at that aerial view, in that final leg, he almost looks like he's running twice as fast as the other horses. I don't know how. I guess he just kept it all pent up, and they started going, and that horse just saw it and just started ripping through. And then when it passed that number 3 horse on the inside, and then I'm like, okay, he's got a lane here. Boom.
Yeah, he stayed
that's
inside.
Unbelievable. That's got to be one of the most exciting races, a finish like that for an 80-1 long shot to come in, for to be at the back of the pack until the final stretch, and then pass 7 horses in the final stretch to win the Kentucky Derby, to catch the announcer by surprise. I mean, I'm not a huge horse fan, but that kind of race will make you a horse fan.
One more thing, quick story, and then we'll get back to the markets. That horse was purchased for $30,000 in a
That's a good
claiming
deal.
race back in the fall from Calumet Farms, right? I mean, which is one of the biggest breeding farms, most successful, for 30 grand. So if you guys don't know what a claiming race is, a claiming race is basically if there's a horse in a race and you like them and there's an amount of money. And all you have to do is you go up to the box, there's a, at the track, and you say, here's 30 grand, cashier's check or whatever. And then you get the horse immediately after the race, right? Well, this is back, I don't know, in the 60s or whatever. There was a horse in this area that was a really good horse. And my dad was trying to buy the horse. And the guy wouldn't sell and he wasn't, doing any races. So the guy took the horse to Chicago and he put him in a claiming race.
How do you know this?
My dad told me the story.
Oh, okay.
Well, my dad's not around, but
Right,
he came
okay,
down.
okay.
Okay.
Yeah.
So my dad and his buddy went to Chicago, okay, with the cash. And the horse was in a claiming race. And so they show up, the horse wins, they claim the horse, right? And the rule is when you claim a horse, the people that buy the horse, you're supposed to give them a bridle, right? To lead them out, like they had the trailer and everything to get the horse. Well, the guy was so upset that he took the bridle off the horse.
Ha.
So my dad and his partner, who actually horse won the Hambletonian once, they had to go around and look for rope in order to make a fake bridle to lead the horse out of the stall. And I think the name of the horse was Mass Painter. Was the name of the horse. Turned out to be a pretty good horse. So that's a claiming story for you. My dad drove to Chicago to pick up a claimer and turned out to be a real good horse. But
so Joel, wait, what you're saying is the horse that won the Derby was essentially paid for with 1 Bitcoin. That's what you're saying.
A little bit more. You'd have a little bit more. Yes.
Yeah, just a little bit left over.
Yes.
Yeah.
Yep.
Okay. A Bitcoin and change, we'll call it. A Bitcoin plus an Ethereum.
Yep.
Actually, yeah. One
Yep.
Bitcoin plus one
What a
ETH
claim.
could have got you this horse.
Okay.
And,
All right,
and now you're at, and that's a good segue into Bitcoin and crypto, which is start. This is a good job, Spencer. This was the start of the tech wreck that we were seeing this morning. It started on the weekend with Bitcoin slowly leaking, continuing to leak the entire weekend. Ethereum, same thing the entire weekend. Yes, these things trade 24 hours, and yes, they do affect the overall market. And yes, it is risk-off weekend, which led to a risk-off opening here for the S&P as well. But break down the Bitcoin and the Ethereum. I've been saying Bitcoin's been holding up pretty well. I've been bearish for a long time. You know that. I've been talking about it on the show. It's finally starting to break. I mean, I cannot believe it's held up this long.
It's a risk asset, we always talk about what category, Bitcoin, and you talk about, like trying to value something, what's the value of Bitcoin? What someone else is willing to pay for it? Nothing. Do you go to a store? Do you use Bitcoin? I mean, but anyways, go ahead.
And I don't think you're ever gonna.
Now, tell your story.
Well, let's just get the Bitcoin breakdown, then we'll go into storytelling a little bit with it too. But so tell us the action here, Spencer. Break it down over the weekend. We were around 39,000, basically Thursday night, and now we're what 32.
Well,
where are we?
Well, what do we always say? The longer you hang out at support or resistance, the greater likelihood that eventually you'll break through it at some point, right?
Yeah.
And we were hanging out at this 40,000 support area for, I mean, months, and some, I mean, a long time.
Yeah, too long.
It's too long, right? So now that's gone. So right now we're at 32,950 in the futures.
There are just a lot of people that are just going to hodl. They believe, they're believers.
Yeah.
And that's when I was going to go into the story here. Friend, one of my best friends, it's his girlfriend's cousin, and he was talking to her on the weekend, or talking to him on the weekend. He's young guy, he's done really well for himself, owns 4 houses, sold all 4 houses, put it all in Bitcoin at 55,000. And my buddy's like, what are you going to do here? I mean, it's down at 35. He's like, oh, I don't have to worry. He's like, it's going to 100. He's like, I'm not worried about that. I'm hodling. He's like, it's eventually 100, and then it's eventually 1 million. He's like, this is my retirement plan. This Bitcoin is it. This is going to make my whole life. And he's like, well, what if it doesn't? He's like, I don't have to worry about that. He's like, and he's like, my buddy was trying to tell him, he's like, it doesn't have to go to 100,000. He's like, no, it does. It's going there. He's like, he believes it with his soul, he said to me. Like, that's what he's like. He's like, his cousin believes it with his soul. And I'm like, this is what is out there. Like, these people believe this has to happen. And I'm going to tell you, nothing has to happen. And in this market environment, this type, if you can call it an asset, is the thing that gets hit the hardest because there's no value investor floor. This is all story.
Exactly.
It's belief. It's hype. When you get a certain point in time on, some of these stocks like an Apple, well, a certain point in time, value investors will come in to create a floor because they're like, this is just too cheap. We're going to buy the stock. But where do you say that for Bitcoin, to your point, Joel? Where do you say that this is the floor? Is it 25,000? Is it 20,000? Is it 15,000? This is like a story stock. Story has gone cold. Is it over? I don't know. Nobody knows that. But it's ice cold. This kind of asset that gets hit really hard right now, and nothing has to happen. Nobody knows everything, or nobody knows anything, and especially nobody knows everything that it's going to 100,000. It doesn't have to go anywhere. This could go, and I truly believe it could go a lot lower. I've been saying potentially 10,000. I don't know what the case is. I have a small little piece left that I left for a legacy position, but I sold my Ethereum. I sold that just the last of it a week ago. I've sold the majority of my Bitcoin, but you know what? It could turn around and it could go to 100,000. And maybe I'm going to be wrong, but putting all your eggs in one basket and selling all those homes. I mean, this is the horror stories that books get written about after the fact. Stay diversified. You can be a Bitcoin believer, but putting 100% of your money in it, man, I cringe. I cringe.
The double-edged sword of crypto is that the fact it has no fundamentals behind, no fair value, no free cash flow, none of that. That all serves to its benefit on the upside because there's nothing to say. Who are you to say Bitcoin is only worth 50K?
Very true.
I say it's worth 100K. Who's
true.
right? I could be right. Who are you to say, right? That works great on the upside, but it also works against you on the downside.
Exactly.
So the same arguments for Bitcoin being at 100K or a million or whatever also apply to Bitcoin at 10 and 5, right?
Where did they come out with those? When did they come out with those ETFs? If not, when?
At the top.
What's the symbol on those?
Well,
BITO, but it's not even a real ETF. They just hold because it's not even set up
Bitcoin,
like
it was October. It was October of last year, but it's Bitcoin futures, so it's not even like a real Bitcoin ETF.
Yeah, so you're gonna have probably but let's go to another story here is MSTR. I mean, MicroStrategy CEO, that is the biggest Bitcoin promoter that ever walked the planet. I mean, he comes on CNBC and he's this person that's got the belief too. Apparently, if Bitcoin, because they're so levered up to buy Bitcoin, apparently the rumor is on Twitter, I'm not sure if this is true or not, but it's been flying around, that if Bitcoin goes to 21,000, they're going to get some serious margin calls because they're so levered up buying Bitcoin. It's one thing to put all your money in it, but it's one thing to put all your money and all your borrowed money in it. So, I mean, these are true believers, and it might work out, but it doesn't have to work out. So that's why I'm just saying, I don't know where Bitcoin's going. It's all just zeros and ones. It's what it is. It's a bunch of digits on your computer screens made up of zeros and ones, and it can go wherever it wants to go. But the story right now is ice cold.
I mean, I still think it's prudent, like the asset allocation, to have crypto in some way, shape, or form. If you have none, consider.
I have none.
No, you just said you have
0.001%. That's basically none.
All right, fine, basically none. I've got a little bit, and I've been slowly adding to it, here and there. But I still think from an asset allocation standpoint, it's good to have some crypto. But I'm not making a call. I have no idea where it's going to go. If it goes to zero, I lose that.
You're going to be fine.
But I won't.
That's such a great point, Spencer. I mean, if it goes to zero, you're going to be okay.
I mean,
so ask yourself that question.
Let's be clear.
Bitcoin,
I'm gonna be pretty pissed off. Okay.
Well, I would be pissed off, but you're not gonna lose all the money that you've made throughout your life. But I mean, Pompliano has all of his money in Bitcoin. He's done really, really well, and maybe he's so rich now, maybe it doesn't even matter at this point in time. But he says something like 97% of his net worth is tied up in Bitcoin. But that's going right against the laws of diversification. It's a hardcore belief. And that's how people get rich. Don't kid yourself. There's some people that get very rich putting all their eggs in one basket and that egg hits. I mean, Kathy Wood made herself off by putting all her eggs in one basket on Tesla, and it hit. And that's what made her. I mean, so it can happen and work in your favor. People win the lottery all the time. But if you want to be cautious with your money, putting it all in Bitcoin is not cautious.
And maybe we can bring it to the stock market too, and even the bond market, because like what happens when there's no desire for any asset, right? Like
Besides US dollars.
everything is puking, right? The stocks are puking, bonds are puking worse, frankly. Crypto is puking. Everything, there's nowhere to hide, right? Everyone is feeling super down, right?
Which makes you think we're due for a bounce. Like just to try to, you know, I think if you're sitting with 100% cash, and I said this on Friday, I think it's time to start putting a little bit of money to work in smart stocks. So, for instance, talking to my wife, this was Thursday night, and I'm like telling her how we got half of our money in cash, and she's like, in our RSP, and in my RSP, the only job for that money is to invest. It doesn't do anything else. You can't bring it out, get taxed on it. So its only job, it can't go be used to buy groceries. It can't be used to go buy a new car or build my house. Its only job is to invest. And I'm 53% cash in there. I had her up to in the high 40s. And she's like, shaking her head at me. He's like, this is a crazy thing to do because, you know, markets go up over the course of time. She's like, buy me some stocks. So I'm like, okay.
All right.
Like,
wait, Joel has an idea for you. Joel, yes. What stock did you mention like a half hour ago?
What do you?
Oh, he hates the stock.
Oh no.
Yeah. Just on a relative strength basis. AT&T.
Oh God, no.
Okay. Look at the
It's held up well, but
why? But why? There has to be a fundamental
reason. They did the spin-off of WBD, which has just been a disaster. I hope you didn't hold your Warner Brothers Discovery if anybody got that spin-off, because it has been just ugly. But it's held up, and we know why, because it's got a 5.5% dividend. It's got a 5.5% dividend. It's got dividend protection, which means there's a floor where certain investors will just buy AT&T because the dividend is 5.59%. So I just don't like the companies. I think in an inflationary environment where inflation's running 8 or 9 and AT&T has no growth, I see myself losing 2 to 3% of that. So a year, but it's better than losing 20% a year.
Exactly.
So we'll give you that. I'd rather own cash and get 3% though, and I feel like I'd be ahead of the game. But then you're losing to inflation too. So maybe you're just looking at AT&T as a better than a cash hedge. But I don't see AT&T as cash. I see it as a stock still. So I still see there's some risk in there. It's a tough investing market, to your point, Spencer. I mean, I look at the stocks right now. I have a filter running 1,000 of the S&P's biggest companies here. 1,000. It runs and it shows me what stocks are trading up. There are 8.
Yeah, Tyson.
8. Tyson's 8 out of 1,000 today, trading higher. So this is this is the thing we're making is there is no place to hide in this market right now. There is no place to hide. We talked about this happening. That eventually, when the bear markets get ugly enough, they start selling everything, and everybody's hiding in commodities and saying, "Oh yeah, this is going to be the place. This is it." You know, Chevron's going to continue to go up 100% a year forever here. I mean, I believe we are feeling peak demand right now, peak inflation. I believe demand destruction is happening around us. I believe it will bring oil prices down. I don't know when that's going to happen, but I believe a lot of these oil stocks are priced in for the economy to continue to rip higher, and that's not happening. A slowing economy will hit these stocks too. Yes, you have the war in Ukraine, which is helping to keep the prices elevated, but eventually a stock is a stock here. And I see Chevron gone in September from $93 to $170. The stock has doubled in 6 months, and you can go back and look at history, Joel, on Chevron. There are not a lot of periods where CVX, one of the biggest oil companies, if not the biggest one, ExxonMobil, Chevron, has doubled in the period of 6 months. There is a lot of war, a lot of good stuff priced in there, and I believe this money will come out here too. I believe you will see Chevron look like NUE. It's why I sold NUE. Look at Nucor, what it has done since its awesome earnings report at 187. It has just quietly lost 30% in 10 trading sessions. I think you're going to see most of your commodity stocks start to look like this once we start realizing that, hey, they're starting to get some demand destruction. You can actually see if we start seeing, with CPI numbers obviously going to be everything this Wednesday, but I don't think
Yeah,
commodities are a safe place to hide anymore. If I had commodity stocks, and I don't have hardly any now left, I would sell them. That's just my opinion. I don't have a crystal ball. I may be wrong, but the way I'm reading the tea leaves here is that there is still a lot of money hiding in commodities. Twitter believes it with their soul that oil is going to continue to go higher. I believe in my soul that when you get a slowing economy, demand for oil starts to come back in. War is the wild card, though. If the war escalates, then it's going to probably keep these stocks elevated.
The other wild card is we do have CPI on Wednesday. So if they come out and say, "Oh, inflation has come way back down to earth," then maybe then we see a little bit of a
don't even need it to come way
and
down
I'm
there.
scared because talking, to Blue, I talked to somebody else, like the data lags. And I'm like, I feel like I'm in today where we're at peak inflation, but that's not going to be in the CPI data. So this number, could be a month from now or 2 months from now where we actually start to catch up. I don't think we're going to, I'm scared we're just too early. And if that's CPI, and it's going to mean everything, if it comes in hot, Katie bar the door, it's going to be just ugly. If it comes in even slightly better, you could get a rip your face off short squeeze. So it's going to go. If there was ever a time to buy options, it might be, but they're going to have the peer premiums jacked. So it isn't going to work either. But place your bets, folks, because we are going to rip one way or the other off that CPI data on Wednesday. But people are nervous going in, and that's why you continue to see the heavy selling ahead of the CPI print.
You know what you could do, Dennis, too, is like, if I know the premium and buying it, you could do a wide spread. Something where you're risking like $1.50, $2, and you can make 10. I mean, that's really the only way, because the premium for like your whatever the spiders at 405 right now.
Yeah.
I mean, the 410 calls. Yeah, you get a great move up to 409.50, and they just don't move. At least on the when you have those spreads on, that you at least you're short, and it just the vol just goes. And sometimes, that's the end. You end up making it on, but we'll see. We just got a little bounce here this morning. We're trading at 40.50, so down 69.5 handles. I think the whole world predicted this, because of the Russian victory day and everything, and the tough talk over there, and a little bit of nervousness. Also, it was just everyone thought we were going to take out the low on Friday, right? We got down there, we got down to that area, and we didn't. So,
but we're taking it out here today, at least in the day session. It's
sure
like, if we've come this far, you don't think we have a day with 4,000? We're going to hit those stops under 4,000. We're going to hit those stops under 4,000. I think so. Then, who knows? It all depends on the CPI. We're going to be weak. We're going to get some bounces. It's going to be choppy but CPI is what matters. It's all that matters. But to another chat's point too, I mean, somebody's just saying, you don't think it's time to start nibbling? I started nibbling back into some stocks. So my wife wanted some stocks. The first stock that I bought her was I rebought my Amazon. So, and I took a lot of heat. I took a major heat when I sold this at 3,100 after the good print. This was with the earnings, and we know I came on that show that day, and I said I sold the rest of it because I feel like we're going to get ugly here in the overall market. And people were telling me I'm going to be rebuying this at 5,000 or 6,000, and why would you sell your Amazon? I was like, well, I bought it at 2,200 before the financial crisis started, or before the COVID crisis started. And it ran up, and I took a double-sized position. Then remember, I had the one for the swing trade, which worked really well, and I was going to hold the one for the long-term investment. But I've just saw so many COVID stocks go full circle and give it all back. I'm like, why can't Amazon do the same thing? So I made the point that I thought eventually I could re-get Amazon at 2,200. I did, and I was thinking about it. And then when my wife says buy some stocks, okay, and she likes Amazon, she shops on Amazon all the time. So I rebought half of my original Amazon position. I also bought more Virtu Financial, VIRT, which is epically looking horrible on the chart. But I started buying this at 29. I bought some more. It looks terrible, but again, high frequency trading firm that actually benefits from more volatility. 3.5% dividend. The thing's trading like 5 or 6 times earnings. Again, what hurts them to a certain extent is if Robinhood volumes are going down, they may be getting less orders. So they may be at peak earnings right now too. So don't just get too attracted to that 6 or 7. But my good friend Sal Arnick now works for the company. I mean,
really,
he got hired. Yeah, Sal went over there and started working for Dougie Large. Yeah. So I mean, there's so many smart people.
Wasn't he with
Themis?
Yeah,
with Themis with
wow.
Joe. Yeah, he left. He's with Virtue now. So,
Wow.
but I mean, this is just a company that I believe in because I believe in that the management. They run the company really, really well. It's a high frequency trading firm, so if you hate high frequency traders, maybe you don't want to put your money in it. But I'm about making money. Virtue Financial, we've played this a few times, Spencer. I played it from 28 to 34.
You
I've
played
had
this
it a
one.
few times.
The stock
Every time this thing pulls back
stock
5 or
never
10
goes
bucks,
up,
I buy
Dennis.
it.
The stock never goes up. It seems like to me.
It goes up and then it comes back down. It gives you another chance. It's the greatest like swing trade channeling stock. So it could go to 25. We're in a market environment where everything's going down. You might get this at 25, but I'm starting to nibbles, not coming off. I'm probably like 47% cash now, and my wife is down like maybe 37%, cash. So they got to get more invested in those long-term RSPs. But I still don't think this is the time where I have to go all in yet. Nibbling.
There was a question from the chat, a couple questions about DraftKings actually, and I want to, we can go there, but as we do that, I want to, I want to read you guys a snippet of this letter that the CEO of Uber sent out to the whole company today that got leaked to the press this morning, and I'm just going to read a couple of sentences because this sentence applies to every company under the sun right now, at least every public company, every growth stock. This sentence applies to. He said, "We have made," this is again the CEO of Uber, "we have made a ton of progress in terms of profitability, setting a target for $5 billion of adjusted EBITDA in 2024, but the goalposts have changed." And the context of here is he just spent like a few days meeting with their largest investors in New York. So that's the context of this letter. So the goalposts have now changed. Now it's about free cash flow. That's it. That's all I wanted to read. That's the bottom line.
That?
The CEO of Uber.
And a lot of these companies don't have a hell of a lot of free cash flow.
They have negative free cash flow.
This is a problem.
That's the point.
Any
company with negative free cash flow, which frankly is most of the growth companies out there, because free cash flow never mattered, right? It was all about top line growth, grow your revenue
at all costs.
Do you actually make money at the end of the day? Who cares? Just grow the top line.
And the market has changed its tune.
Yes.
Once again, we go through these phases. This is 1999 all over again, folks, where it didn't matter. The earnings doesn't matter. The CFA Institute wrote a chapter on their. I tell this story. I've told this story before, and I've been involved in helping to write some of the CFA Institute curriculum. Over the course of years, I've been very involved with CFA Institute for the last 20 years. But I can remember when I first started doing my CFA back in 2000. And they added a chapter into the curriculum on how to value companies with zero earnings. They added that in the year 2000.
That's zero earnings. That's not even. Oh, that's
yeah.
Okay.
And in 2002, and I remember it was Carl Schweizer. I used to go do the Schweizer, and he was actually a great instructor. And I remember in 2002, we were talking about this chapter that they had added, but this is after the tech bubble burst. He says, don't expect any questions on the exam from this chapter. It was 5 pages on how to value these. Expect zero, because here is how you value companies with zero earnings. And he had a big chalkboard and he wrote a huge zero on the board like that. And I mean, this is, so we've went through this before. History, as Mark Twain has put, as Ryan Dietrich tells us, doesn't repeat itself, but it sometimes and often rhymes. This history right now that you are experiencing is 2000 tech bubble burst, and we are like in 2001. We're already a year past it, so we're doing the same thing. It took 2 years to start to come out of it. We're a year into this because this started with February when all the Kathy Wood stocks started coming down, all the growthy names. We're like 15 months in, so we, if we're following that path, we probably got about another 9 months of this crap. But CPI data could change, everything can change, and we don't know if it's going to be identical. But we've seen lots of stocks down 60, 70, 80%. So in that time, the NASDAQ fell 81%. I don't think the NASDAQ is falling 81% this time because the valuations aren't extreme on a lot of companies. But could the NASDAQ fall another 10% from here? I would be a buyer. I'd be buying more stocks if the NASDAQ fell another 10% from here because some of the valuations in the companies are reasonable. Give me to reasonable valuations on some of these companies, and I start loading up.
Well, my whole point in bringing up the Uber thing as it pertains to DraftKings, because someone asked about DraftKings, and we can look at the chart all we want, but my point was, whenever any company starts to show its free cash flow going in the right direction, that is the time to strike. Then I don't know
That's
when that
probably a
is,
good point.
whether it's next quarter or the quarter after that. I don't know. But if I think what's DraftKings free cash flow right now? It's like negative $500 million, right?
Doesn't sound
So,
great.
right. So when that metric starts to improve, then you can start nibbling. And I don't know when it's going to be. But I'm going to apply that logic to every stock across the board, right? Buying until I see that number improve. Let's go to a couple individual stocks here. I want to go to Rivian for a second. This news broke over the weekend because over the weekend what happened was Rivian's lockup expiration happened. Their lockup period expired. So all these insiders that own a lot of Rivian shares are now free to sell. Ford owns a lot of Rivian shares. Ford owns about 100 shares of Rivian stock. They're selling 8 million of those shares in the open market here imminently, that they've said. So that is going to weigh on the stock today, probably for the next few days. Ford, big time seller of Rivian shares, but now anybody who is in the same boat as Ford is also able to offload the Rivian should they choose to do so.
Holy mackerel.
The hype, the story, the coolness. We've hated, and if you've been listening to this show since November, we have hated Rivian on this show. Not the company. I have no problem with the management. I don't know with them, but it's the stock price and the valuation. It never made any sense whatsoever. It went to $179 where all the dumb money on the storied hype has just got to be in. And then when it eventually broke 100, the shorts has just been raking it in. It's never looked back. Shorts win here. Yes, they win again. Yes, I know everybody hates the shorts and wants to squeeze them all. The only people who got squeezed on this stock were the longs, down 19%. I don't know where the bottom is. Is it worth something? Probably worth something, but its valuation is still probably nuts. I don't know what the market cap is. I didn't look it up, but when we did the exercise with Lucid the other day, I was like, well, when Lucid was like 28, I said, if you really want to start doing, valuation stuff, it feels like it's a $5 stock. Well, Lucid's now 17. So, I mean, we're almost halfway there from something we said a month ago. So could Rivian go to $5 or $10? Absolutely. Is it going to go straight there? No. Is there going to be short squeezes? Yes. Is it, could he eventually go back to 30, 40, 50 if they figure out how to sell a hell of a lot of cars? Maybe. But I look at this and think valuation still probably very extreme. Cash flow, to Spencer's point, probably still very negative, if any cash flow is even there. And I think why do I want to put my money and be the hero and call the bottom at 23?
You want to know what Rivian's free cash flow is? It's negative 4.4 billion with a B, billion.
Yeah, this is not the kind of stock that does well in this environment, and it is justified. The price, you can say, how ugly can it get? It can get very ugly. We have too many EV companies, too many startups. Yeah. Some of these are going to be zeros. I don't know if it's Lucid or Rivian, but I'll tell you, some of these EVs are going to be zeros. And wait till we start getting some bankruptcies. I mean, we haven't even seen any bankruptcies yet. Wait till we start seeing companies actually go and say, okay, it's game over. That's coming, man. Not maybe for Rivian, not maybe for Lucid, but maybe. We don't know. But it's coming. So don't think, and I'll tell you again, got to repeat this. The person that buys Rivian, if Rivian goes bankrupt, hypothetical, they're going to say, oh, Dennis, it's going bankrupt. They're saying a hypothetical situation in the event that RIVN didn't make it. If you buy it at 179 or you buy it at 23, you're in the same boat. You lose it all. So, I mean, $23 buyer is just as dumb as the $179 buyer if the company was to go to zero. I don't know if it's a zero. I don't think it's a zero. I think it's probably worth something. But I can tell you, there's going to be some EV companies that go to zero. They're not all going to infinity and beyond.
Mm-hmm. What about the breakdown in Lucid? Not Lucid, Tesla.
I know.
I mean, you got to be concerned about this one. But they had this low right here at 821.70. You bounced off that today. Maybe we'll hold up today. But I mean, does this thing, have a date with 756 or 700? I mean, the closer it gets to, I guess, like the strike for Musk is like 540. As far as where there's some pressure on that, but man, oh man, that is not a good looking chart at all. So you Tesla traders, keep an eye on 820. That was the pre-market low. You had your low right here, just one stinking low at 821.70. After that, under 800, and then maybe you got a dip with 700.
It's hard to say. I mean, valuation doesn't make any sense on this thing either. But Musk, I love Musk, and I believe in Musk, and I know Tesla has some value investors actually down below. Those value investors might be at 200 or 300, but they're there. But it's never. I don't think it's ever going to get into value territory because this company just has so much belief. It's its own animal. So, I mean, it wouldn't surprise me if Tesla led the next bull run out of here and it just goes and it keeps going up because everybody just believes in Musk. But at the same time, it's not going in my long-term portfolio because it goes against all my core demanding of growth at a reasonable price. Love Elon Musk. I can't bring myself to buy Tesla 100 times earnings.
And
Tesla,
you may miss
Tesla
something.
to its credit, has positive free cash flow.
Yeah. Oh, yeah.
Oh, yeah.
It's worth something. It's not. I can tell you one thing. Tesla is not a zero.
Oh, yeah.
Tesla is something. Some of these EV companies are zero. It's not Tesla.
Yeah.
Tesla is something. Tesla and Musk. I love Musk. I wish it was a reasonable valuation. If Tesla came to an earn PE of like 40, I'd load up. But, at 100 or 120 or 110 times still, I can't bring myself to do it.
Yep. All right. It is 8:36 now on Monday, which means it's time for our regular segment where we talk market structure with Mr. Tim Quast on Market Structure Mondays. Tim Quast, founder of Market Structure Edge. Mr. Quast, how are we doing today?
Very well, thank you. How about you guys? I just caught the Tesla discussion, so I don't know what else happened. Any big drama over the weekend?
Well, I mean, everything is down. So if you consider that drama, then yeah.
Not everything, Spencer. Fortunately, what we told Edge subscribers to do, we said on Friday, just whatever you got left in your retail trading account, take it out and put it on the 80-1 long shot at the Kentucky Derby.
That's
oh my gosh. We talked the horse race. I don't know if you heard the breakdown of it, but I'm not a big even fan of horses, but I do watch the big races. But that horse, nobody saw that coming, man.
The announcer didn't even know the name of the horse. He didn't even know what to do with his horse coming up on the inside.
Yeah, that would have been nice to put all my money on that. But let's talk about
we would never do that. By the way,
this market here, Tim. Is there any market structure reason to suggest that there could be a short-term bottom at all?
Yes, there are actually. So number one, the way that we measure supply and demand in the market, and we measure the way that the behaviors that drive buying and selling wax and wane. Demand is at 2.9. So statistically, historically, throughout the entire data set, the probability of a gain from 2.9 is a number approaching 100%. Now, that doesn't mean it's sustainable. But so there's one that when we get well below 4, the lowest measure we've ever recorded, by the way, was March 23rd, 2020. It was 1.9. But so for perspective, this is one of the lower reads. So that's one reason. And then we've noticed this phenomenon, and I'm not, again, it's a data point about that's from market structure. So, I always tell people, why is the stock market down? Well, China's slowed down. We're concerned about recession, war in Ukraine. Okay, those are all external inputs that will affect people's behavior. But that's not how the stock market works. That's not the physics of the stock market. The physics of the stock market are A, the rules that govern how prices are set, and B, supply and demand. It's that simple. So another phenomenon we have seen around short-term gains for the market, which may very well be followed by further declines, is a steep surge in buying. It's happened 3 times year to date, and it happened after each of the preceding 2 dips, and that happened last week. So is there the high probability of a short-term, even today, as you listen to the dour discussion on various news sources from Bloomberg to CNBC about conditions, you never know. You never know how the day will unfold. It's a new week. But there are 2 reasons that it's possible that we have a short-term bottom. I don't think that we're there long-term yet.
Okay. What are the reasons that would be for a short-term bottom?
Well, so here, and let me just show you this. So, one of the things that we
in what short term, Tim? Could you give us like week, 2 week bounce or something?
Week, 2 weeks. Week,
okay,
2 weeks.
I like that. Good, thank you.
Right. We have options expirations the week after this one. So I think those are important. The Russell rebalance gets pegged. Boy, what a mess that's going to be.
Yes.
Those are two very important things that are going to affect how people approach the market. But here's how. So this is the good and the bad. I'll show you broad market sentiment here. This is our read of supply and demand. So here is. Let me just zoom it in for you. So this green line, see, it's bottoming. It's at 2.9. That's a miserable read. The reason that the market continues to be weak is looks to me
like it's still going down. I don't know.
Trend doesn't look like your friend.
I don't know.
From a trend perspective, it's probable. That's sure it could change. From a trend perspective, it is probable. And if we look back long term, that's a pretty steep drop below the green line, which has statistically indicated a bottom. Doesn't mean it's immediate, just gives us a read. Okay. Here's the problem down below. Look at the supply side. It's as though in an economy, everybody stopped buying goods at the same time that the supply chain recovered and furnished the market with an unbelievable supply. What would happen to prices? Well, they would go down, right? So notice the short volume is all the same as 48% as of Friday. That means almost exactly half of all trading volume is either A, borrowed, or B, created. And what does that come from? It comes from market making, of course, but the other two inputs will be heavily leveraged inverse ETNs, exchange traded notes that are betting on a bearish market. So then the parties who are providing those will back them with a bunch of puts, and that'll show up that way in the data. So these are two offsetting forces, and that's what causes trouble. Nonetheless, if they reverse, what happened if this went down? Because it's not a static condition. It always goes down. Did the same thing here. So will it come back down? Yes, it will. And if demand picks up at the same time, we're going to have a short-term surge. Could it be into options expirations? Could be. Could be. And then I would fear the destruction to another handful of these synthetic exchange traded notes. And in that context, just a funny little anecdote. I had a contractor at my house here in Denver doing some grout work, and he says to me, "Have you seen that NRGU?" Well, look up NRGU. It is a triple levered energy ETN, and it's staggering. It's got $67 billion worth of assets in it, making it one of the largest exchange traded stocks in the market. But that's where we are. Everybody has been so beaten up, they're leveraging into things. And that tends to be the later stage of a bunch of destruction. So, those two things kind of balance each other out.
So I sit here and I don't know what to do now, Tim. Like, part of me thinks, okay, I could play this short-term bottom. And the other part of me says, hey, long-term, Tim still says the going isn't that great here yet. So what do we do?
Well, then you have to be, as you should be anyway. You should be selective, and you should be very confident in the things that you trade. And how I would look at this is, as ever, you buy diverging supply and demand. And I'm going to go, so I put a couple of things here in the Benzinga May 9th portfolio. Notice that the read for the stocks in this portfolio, look at this, rising demand, falling supply. Those are the conditions that will generally produce gains no matter what else is going on. If you're very risk averse, a great opportunity would be Pepsi. Its intraday volatility is a quarter of the broad markets at 1.2%. It doesn't move a whole lot. It's at 5, right at the axis of supply and demand, and the supply side is down. So that's a place where if the market is rocky, you can probably preserve capital and produce modest gains. You have to set your expectation low. It's just 1.2% of intraday volatility. Or you could trade something like Phillips 66. So this is clearly comes with more risk because the broad sentiment reading is down. But if you look at the supply demand balance in PSX, that is exactly what you want to see. You want a steeply rising demand curve that is well over 5, well ahead of the market, and a supply side that has fallen back below trend and has a steep downward curve. Those are the kind of things that it's not linear, that will tend to produce gains. So for instance, I'm going to give you a little tip, edge traders. So if PSX today is down, and it's down at least half of the intraday volatility, 3.6%. So say it goes down 2%. If you buy it when it goes down 2%, the probability that you produce a return tomorrow or the next day is extremely mathematically high. Again, I'm kidding you not, it is close statistically to 100%. Why? Well, because the divergence down is due only to intraday trading, not the supply-demand balance, and that's an opportunity. I did that with AutoNation last week. AutoNation, great supply demand. It's extreme demand and plunging supply. So when the stock went down 3.1%, I bought it and I produced a very nice return. But that's what you have to do as a trader in a market that is very forbidding. And you have to take gains, not chances, I like to say, but you want the math on your side. That's what I think, Dennis. I realize that is a market structure view, but it's a very reliable way to approach challenging markets.
I mean, and this is the tough thing. I mean, everybody's got an opinion out here, and obviously you're using a quantitative approach, and I'm a big believer in quantitative analytics. I'm a big believer in the quantitative approach to the markets. I try to do that in my regular trading as well. Obviously, sometimes things work, sometimes they don't. But, when you can take that bias out, and I often find myself having a bias on this show, but when I try to trade market neutral as much as I can. I'm trying to take advantage of little market inefficiencies when I can. And, you try to give a little opinion and have some fun sometimes too. But it's difficult to for a human being, to just go through it. So when you look at the quantitative approach to it and say, hey, we're very oversold here and we're due for a technical bounce, it often does come to fruition.
It does. But and I will add to that, Dennis, that it's always, to me, contextual. What will produce a bounce is where we are in context of the things that drive the stock market, which include, I mention them over and over, but there are three big things to me. New month, new money. Money comes in through retirement plans. It's programmed commitments to retirement plans. There are options expirations, roughly call it the third Friday, but it spans 5 days. It's not 1 day, it's 5 days where there are options expirations occurring, and then month end, when the Steve Cohens of the world will true up their positions and manage their risk and determine what they're going to do next, and the index funds and ETFs will try to square themselves with their benchmark. So where are we in that context? Well, we're roughly 2 weeks out from options expirations. Well, so when you're 5 days out of the money, that's a trade heavily preferred by quants. Quants like 5 day out of the money options, up or down, because there's a chance to drive up the underlying and produce a significant return on the option. So that there's a probability sometime this week that it turns, because that's the trade that will come. I think those help us think well about the stock market. I always go back to the fact that if you're a doctor, you got to know human physiology. If you're a lawyer, you got to know the law. If you're an engineer, you got to know math and physics. If you're a trader in the equity market, you must have a basic comprehension of its form and function. You could be the best Benjamin Graham analyst of bottom-up intrinsic value on the planet, but if you don't understand how the stock market works, you're not going to succeed.
Tim, before we let you go, how many years of data is your market structure based on?
In its entirety, it goes back to 2005. This is when we first ran very large tests, and it was right before the implementation of Reg NMS. In the data set you see here, we can go back to 2012. There are reasons for that. And then we keep shrinking it because things have changed so dramatically. You cannot rely on data from 10 years ago to tell you what will happen in the equity market. Why? Because of the massive shift to indexes, the explosion of leveraged ETNs, exchange traded notes, exchange traded products, the way that money continuously shifts its exposure every quarter, the way that hedge funds manage risk, the massive size of BlackRock's risk management strategy. People forget this. Its Aladdin division supplies risk management tools to $20 trillion worth of assets. Well, all of these things feed into the way that the market works today. So I think you have to shrink. It's contrarian, it's counterintuitive. It's contrary to the orthodoxy that you want to have a large data set. But in order to have apples to apples, number one, what you measure has to be within Reg NMS. Regulation National Market System was implemented in 2007. So it has to be within that. And then I think you have to go to where this huge divergence between passive and active money has occurred and make sure that you factor that in. That's what we do.
Tim, can we do one more before we go?
Absolutely.
I'm just curious too. Roblox, can you take a look at it? Because here's a stock that has just been an epic disaster for 2022. I mean, it started the year at $100.
They have earnings this week.
We're $27. The stock is obviously down significantly from the all-time highs. And, you know, a lot of people saying, wow, how low can it go? I've said before, I know these stocks continue to go a lot lower than you think. But I mean, what's the quantitative approach looking like on this? What's your system market structure, I'd say?
Not so bad. I mean, you have an increase in demand. The bad news when a stock is at 2.6, you see that's where this is.
I was going to say 1 or 2 on that one. I should have guessed.
Yep. But it's rising. So you would say, how can the underlying demand be rising when the price is falling? Because it's not predicated on price solely. Price is an input. It's one of 5 inputs, but that alone, that's the problem. That's why we tell people don't trade price. Price will fool you. You have to trade supply and demand. And demand is supply is a little above trend, but has flattened out. So quantitatively, there's a chance that Roblox does all right, regardless of what it reports, because demand is rising faster than supply. That's not a lot of upside, but it's some. So you could know that going into earnings, that might be the case.
Tim Quast runs Market Structure Edge. If you want to learn more, go to marketstructureedge.com. Tim joins us every Monday, and we always appreciate it. So, Tim, have a great rest of your week.
And, always good to see you guys. Thank you.
All right, I want to talk Palantir here quickly. They did report earnings this morning. Yep. I'm almost loath to give the numbers because, frankly, the numbers don't even seem to matter that much to me. Even if they were good, I don't think they matter. In this case, they weren't that great. The EPS missed by a couple cents. The sales was fine, but the guidance they gave, the forward-looking numbers, was below Wall Street's estimates. The Q2 sales guidance was $470 million versus a $483 million estimate. So the forward-looking stuff came in below. But again, I'm almost loath to give the numbers because they don't matter. Sentiment is so weak.
This is a new all-time low by $1.
Yeah. The stories, stocks, that don't make money. It's all the same thing. If you owned a stock that was cash flow negative, no real path to profitability, I mean, it all looked the same. They've all been, it all came back. Like this all makes sense. I mean, this is what had to happen eventually. We didn't know when it was going to happen, but eventually it had to happen. So I don't know where this is.
Bitcoin too.
What's that?
Didn't they buy
I think they added to their balance sheet. So yes, they bought some, but they did it in a way that like companies do it just for their treasury, right? They just added to their treasury. I don't think it was like we're making a call on Bitcoin here. It was like we're just going to add Bitcoin to our treasury, so we have less cash and more Bitcoin. Oh no! That's right. Thank you guys. Chat's so smart.
Gold.
They bought gold. They bought gold.
Yeah, I knew it was some. Okay.
Go, Peter.
Make your stocks making new all-time lows. You got to go. You don't hold stocks making new all-time lows because it's the death by 1,000 cuts, the slow bleed out that often comes and follows. Could this be the one that turns around? Maybe, but quantitative approach, I'm not betting on it. Now, is it oversold? Yeah, but keep playing for these oversold bounces and you keep bleeding out. So it's tough. Kathy will probably load up.
I was just going to say, is she still in this one?
Oh, I think so. She'll probably load up. Down 15%. She'll use whatever. She'll sell some more Tesla stock to buy this one.
Yes.
She finances her loser. She adds to her losers by selling her winners.
No, she just sells the smaller stuff to find
No, she sells Tesla. Look what she sold on the weekend.
Yeah,
this is what she does all the time. She's out of money in the smaller stuff, so you got to keep adding to the losers. But you look at this and you're just like, I'm trying to look. Let's look what she did Friday just for fun. I know I pick on her a lot, but it's deserved. So that's all it is. But she didn't do anything on Friday. She's out of don't dry powder.
She took the day off.
took the day off. All right.
So on Thursday, she bought Shopify, sold Twitter, sold a bunch of Twitter to finance it. That's how she works.
All right.
Exactly opposite to what you're supposed to do as a trader. You read a book.
Were there any questions, any takers in the chat? I mean, I saw that. I don't know, Joel, if you ever gave levels on D. Why don't you give some levels on DKNG? Because we got a earlier in the show.
DKNG, I don't know what to say.
Is that an all-time low too?
Well, it was SPACified.
Oh yeah, SPAC attack. $10.
No, it is.
It
is a new all-time low. At least on my
since it de-SPACed.
Yes.
But it was a SPAC at one time. We know for whatever reason these stocks that de-SPAC and then eventually come back to 10 seem to bounce around 10 when they get there. Comes around 10, maybe get a bounce, but again, same story. There's no earnings here. Negative cash flow. I mean, this is not the stocks you're looking for in this environment. Could they turn around and bounce 30% in a day? It could happen. If the CPI data comes in light, I'll probably load up this crap, but
a short-term pop, but last week was
but not touching the long-term portfolio.
Little buyer here at 1250. I mean, just tap it. Just maybe bring in a short in. It had decent earnings, right? The other day, right when it came out.
Everybody has had. You want to hear a stat, Joel? This is a stat. This is from FactSet. All right, this is from Friday. All right, as of Friday, about 90% of the stocks in the S&P had reported earnings for the first quarter. Okay, so almost all of them. And of those 90% of companies to report earnings, about 8 out of 80% of those, so 80% of the 90%, have reported positive EPS surprises. They've beat on the EPS, and it doesn't matter. It does not matter if you beat the estimates, at least for EPS, at least for the backward-looking numbers, at least right now. It does not.
And we'll tell you why it doesn't matter, because when you miss, they hammer you and keep bleeding you out, and when you beat, it stays up for a day or two, and then they start to go back down anyway. So it's like heads at shorts win, tails at shorts win. Look at Visa. Everybody's like, Kramer's like, you got to buy Visa after it pops because he chases every move. 203 to 220. That was like predictable. You knew that was coming back in, but Kramer's buying a 220 and he's buying the top again, and it's right back down. He hasn't figured out the momentum market's broken. Or at least, the momentum to the upside market's broken, not to the downside at all. But the companies miss. They crash down and burn and continue to bleed out. The companies beat. They pop for a day or two, and then eventually they just leak and start going out. Remember Upwork? That was a great one, from last quarter. The big pop up on the not Upwork, Upstart. Well, same thing now. $100 to $150 on the earnings report, back down to 83. Good earnings reports doesn't matter. To Spencer's point, fantastic point. They got good earnings. They pop for a day or two, and then eventually start to come back down anyways. We are so oversold though, so I don't want to end on that note. We are so oversold on a lot of stocks here. I think if you're sitting with a lot of cash, you got to start nibbling. I've been slowly nibbling. Yeah. I don't know how the CPI, I don't want to be all in, but I don't want to be 100% cash either right now. There's a lot of people texting me and they're like all cash. I think you got to nibble. You got to start nibbling a bit as an investor, as a trader. Do what you got to do.
I do want to clarify. Earnings, yes, they matter in the long term, but for right now, for this environment, for the next few weeks, dare I say, a few months, maybe even for the rest of the year, they don't matter. For short-term sentiment, they're meaningless and they don't matter. You can say. Like who reports tonight? I don't know. Like AMC.
You should have the retailers coming out soon, right? Shouldn't we have the retailers
next week? Okay. Like here, I don't know. I can't think of a good example right now. Like, all right, like the trade, like Roblox. Okay, we just talked Roblox is tomorrow night. Okay, so they could come out and say, "Oh, we had tremendous user growth, and
but they're not going to. This was a COVID stock.
No, fine. So it's a bad example, but the point still stands.
I don't know that.
The point still stands. No, you're right though. But the point still stands that like for the short-term sentiment, it just like in the fall of 2020, you could have come out and said the worst news ever, and your stock would have been bought. The vice versa is true now. You can see you come out with good news and your stock will go down because that's what is happening. So.
I think we're oversold. I don't know if I'm buying any of those stocks, but like I said, nibble into a little bit of Amazon, nibble into good companies now, not stories, not the hot thing from 2020. Nibble into good companies at these prices. Nibbling. And if your own company can't figure out the good company, maybe you nibble into some indices. Maybe you nibble a little bit of SPY. Maybe you nibble a little bit because, but do I think it's going to get uglier? I do. And that's why, but I might be wrong. That's why I don't think it can be 100% cash. I don't like, I'd like to bring that cash component down to about 30, 35 in my long-term portfolio over the course of the next little bit. And if the CPI data comes in light, then that'll change everything. But I've been buying Disney. We know that. I'm getting my ass kicked on it. My cost base like 126 on it. It's $108. So, and I brought that cost base down because I bought it first bad, really like 155. So my first purchase was awful. I bought the third position and then I've added, now it's a double sized position. It's a big one. I've added to it 3 or 4 times, adding to losers. So I'm not supposed to do that, but I don't think Disney's a zero. I don't know why. I just don't feel like Disney's a zero. That's sarcasm, folks. But I mean that you're buying companies that aren't zeros. You're buying a Palantir, that might be a zero. I can't touch that. I don't know what that is. But I know Disney is $200 to $110. I know there's a lot of people that like going to Disney World. I know they come out with a lot of good movies.
All right, I got it. All right, I'm gonna hop. Triple D, I'll catch up with you at 10. Everyone have a great day. I'm gonna go talk with the Brentster. He is gonna comment on some of the Fed comments, which seems to be moving these markets. So everyone have a good day. I'll talk to you later on.
Palantir ain't a zero. I don't know.
I don't know if it is.
I don't know what it does.
But do you think Disney? I just want to hypothetical. Do you think Disney's a zero?
No, of course not.
Of course not. That's the words. But do you think Palantir is a zero? You can't say of course not. You can say I don't know.
I mean, their revenue's going in the right
direction.
That's
the difference.
I just said revenue doesn't matter, but at least it's going up. So
what about Unity? I mean, this was the story stock too. Michael, I don't know
what that company does. I don't know what they do. I'll be honest. I don't know what they do.
But Unity reports Tuesday night.
Okay.
It's $55. This stock has just went from 100 to 55. I mean, at a certain point in time, Unity, I believe in Michael Pachter, but this is a re-rating of everything. But this would be one. I'd put Unity on my shopping list, and not because not long term, but as a trade. If that CPI, if the market starts to rip, this is one that could really. We've really been hit hard here. But I'm not going to be a hero. It's at an all-time low. I can't be the hero and just say this is the bottom. So I need some type of catalyst or something, to stem the tide here. But, I mean, it just gives you perspective here. I mean, the stock just fell 50% a month. I mean, these are some epic falls. So if you're coming in and getting bearish now, you are so late to the party, man. Listen to the show 3-4 months ago when we were getting bearish. I'm starting to try to put a little bit of that cash back to work. And as a trader, I'm market neutral. I'm not short biased anymore as a trader. We have sold off significantly on a lot of these stocks. But as an investor, I'm like, we could still go lower. There could still be more downside. But the easy money, I'm going to say today here on the show, the easy money has been made on the short side. It's not going to be that easy going forward for the shorts. So I'm not saying I'm going all in, but I'm saying the time is, if you're short stocks, epically short here, like Unity and all these, I think the time is to start bringing some of that in. The time to get, being short the market has passed, in my opinion. Now, I don't know. The CPI could be ugly. Maybe we're just going to keep tanking. Maybe we're going to get into an epic fall. We're going to fall 30, 40% on SPY, but I don't think that's happening here. I don't feel like we're in that, ridiculous valuation on a lot of those SP companies. I mean, S&P multiple, 19 times, Spencer? 18, 19 times? It's higher than normal. They're not cheap, but they're not like 40 or 30 or 30 it was back in the year 2000. I mean, we're not at ridiculous levels.
No.
But. So I'm trying to bring it full circle here and say, we say when we're laughing at the market a little bit here, like it's going down, but at a certain point in time, you got to start nibbling it. I think. Maybe I'm wrong.
Maybe, and expect short-term pain either way. But all right, Dennis, have a great rest of your day. We'll catch up with you later. Everyone, I'm going to hop as well. We're going to end the stream, go over to live trading with Benzinga. Before I go, a couple quick announcements. Quick announcement number one, this week is FinTwit 2022. I will be in Vegas beginning on Thursday, getting ready for our epic 2-day event, all day Friday, all day Saturday at the Aria Hotel Resort and Casino on the Las Vegas Strip. If you want to join me, go to, I'm going to put this link up on the screen, actually. I'll make it nice and easy for you. FinTwit2022.com. Let me make sure I get it right. Yeah, there it is. FinTwit2022.com. Check that out. Scan the QR code on the screen. That'll get you there as well. Obviously, you have 3 days left to get your ticket, if there are many left. So just use that link if you're going to be in Vegas and you want to decide to go. I mean, just seriously, it's going to be freaking awesome. I haven't traveled for Benzinga in 2 years. I'm so hyped for it. So I'll be there Thursday, Friday, Saturday in Vegas. Hopefully, I'll see you. Second thing is our revamped pre-market page where you can watch this show and get more ideas for your morning, figure out what's up, what's down, the biggest ratings, biggest headlines. Benzinga.com/pre-market. We just redesigned it. It looks amazing. So check that out if you haven't already. And smash the like. We're not doing very good on likes today, but thought we'd do a little better. That's all right. Can't win them all. Smash the like, subscribe, do all that good stuff. Thanks, Tim Quast. Thanks to all of you for tuning in. As a reminder, all the information from this show, from all of our shows actually, meant to be used as informational purposes only, not for investing or trading advice. Going to end the show now. Send you over to live trading with Mitch, Ryan, and Zunaid. I'll catch you guys later at 11 for futures trading with Ninja Trader. In the meantime, good luck at the open. And stay green.